Trade leaders, not laggards. This simple yet powerful mantra has been a guiding light for our trading decisions at MTG since 2002. By focusing on the strongest performers in any given market or sector, we can potentially increase our profits and minimize our risk. Imagine you're at a racetrack trying to pick the winning horse. Now you have two choices: the horse that's been consistently leading the pack and beating its competitors, or the horse that's been lagging behind and struggling to keep up. Which one would you choose? The answer is clear. You'd pick the leader, not the laggard. Well, the exact same principle applies to trading. We want to always align ourselves with the stocks or cryptocurrencies that are consistently outperforming the market and leading their sectors higher. Take a look at these two charts. Both Nvidia and Intel are popular stocks in the semiconductor sector, but their performance couldn't be more different. While Nvidia has been consistently outperforming the market and leading the semiconductor sector higher, notice that Intel has been lagging far behind and struggling to keep up. It's tempting to think that laggards like Intel might eventually catch up to the leaders, but most of the time, this is a costly mistake. Laggards typically underperform for a reason, whether it's poor management, weak fundamentals, or simply being in the wrong place at the wrong time. By trading laggards, we're basically fighting against the market's momentum and trying to pick a bottom, and that's a strategy that rarely ends well. So instead, our focus should be on identifying and aligning ourselves with the strongest leaders in any given market or sector. When we trade leaders, we're putting the odds in our favor. These are the stocks that are outperforming the market for a good reason, whether it's strong earnings growth, innovative products, or simply being in the right sector at the right time. Now, I'd like to share a personal story about a trading experience that taught me a memorable lesson about the importance of trading leaders, not laggards. Back in the year 2000, even before the birth of Morpheus Trading Group, I was a proprietary stock trader at Carlin Equities, focusing primarily on sector trading. My strategy is I would day trade a small basket of 3 to 5 stocks that showed top relative strength early in the morning, and typically they would continue higher throughout the day. One morning, I noticed that the pharmaceutical sector was up big on massive volume, a key buy signal that caught my attention. So I chose a handful of stocks in anticipation of riding intraday gains higher. I specifically remember that one of those stocks, Merck, MRK, was already trading about 5% higher on the open due to strong earnings, and it was showing high intraday relative strength. So I looked for other stocks in the sector, and I picked SGP, Shearing Plow. Now at the time, while Merck was up 5%, Shearing Plow was only up 1%. In my head, I thought that Merck was already up too much, so SGP would likely catch up to the other leaders in the sector. So I bought SGP rather than MRK. However, by the end of the day, Merck had gone on to double its opening gain and was trading roughly 10% higher, while SGP merely spun its wheels all day and finished roughly where it started, about 1% higher. After this experience, I found myself immediately wondering, why did MRK continue higher while SGP did not? What was the underlying reason for this divergence and this discrepancy? But then, like a revelation, it hit me. The reason, or the why, is irrelevant. It doesn't matter why. In the end, only the price action matters. You see, stocks with top relative strength are that way simply because they're the ones the smart money is buying the most. Therefore, it's the path of least resistance that causes the relative strength to develop. Remember from our lesson on volume analysis that we always want to ride on the coattails of institutional investors, smart money. Identifying relative strength is one more way to do so. This eye-opening experience taught me an extremely valuable lesson. Don't buy laggards and expect them to catch up. It doesn't happen most of the time. Instead, buy the leaders because they are the ones the smart money is buying and will therefore have much better odds of continuing higher. This principle has become a cornerstone of my trading philosophy and has served me well throughout my more than 25 years of trading. Now, it's important to be aware that buying leaders, rather than laggards, can be a bit scary for newer traders because it goes against human psychology to buy something that's already up a lot. We often have a tendency to think that stocks that have already risen significantly are too expensive or due for a pullback, while stocks that have lagged behind we might view as bargains or they're going to catch up. However, this faulty mindset can lead us to miss out on the most profitable opportunities. Remember, the market rewards stocks that demonstrate strength and leadership, not those that are lagging behind. Embracing this concept may feel unnatural or counterintuitive at first, but it's a crucial lesson for success in swing trading. Focusing on leaders also aligns perfectly with the overall Morpheus philosophy of trading with the market's momentum. By identifying and trading assets that are outperforming the market, we are firmly aligning ourselves with the path of least resistance. This not only increases our chances of success, but also helps us avoid fighting against the prevailing market trend. Imagine a stream of water flowing down a hill. The water will always follow the path of least resistance, effortlessly flowing around rocks and obstacles. In the same way, the smart money in the market will naturally flow into the stocks with the highest relative strength, as these represent the path of least resistance. By focusing on the relative strength leaders, we are aligning ourselves with the natural flow of the market, just as the water flows down the hill. This is a powerful concept that can help guide your trade selection process and greatly increase your chances of success in swing trading. By focusing on the leaders, we can potentially increase our profit potential by riding the momentum of the strongest stocks. They will typically outperform the benchmark indexes. We can also reduce our risk by avoiding underperformers and laggards. Stocks with relative strength are often the last to fall when the rest of the market does. And finally, we can simplify our trading decisions by focusing only on the cream of the crop, the best of the best. Now, let's put your understanding of trading leaders versus laggards to the test. I'll provide you with two charts, one representing a leader and the other representing a laggard, both within the same industry sector. For each chart, analyze the stock's performance relative to its sector and consider the following questions. Which of these two stocks is demonstrating strong relative strength and leading the sector higher? Which stock is lagging behind and underperforming its sector peers? Based on the principles of trading leaders, not laggards, which stock would you consider for a potential trade between these two? Pause the video now and take a few moments to analyze both charts. Once you've completed your analysis, resume the video and we'll look at your findings together. So in the first chart, we see that Amazon is greatly outperforming the e-commerce sector. Amazon is consistently leading the sector higher and showing top relative strength. This is a classic example of a market leader that we would consider for a potential trade based on the MTG strategy. But in the second chart, we see Wish underperforming the e-commerce sector. Notice that Wish is lagging behind its sector peers and struggling to keep up with the momentum of the overall sector. This is a prime example of a laggard that we would avoid trading based on the principles of focusing on leaders, not laggards. By concentrating your effort on identifying and trading market leaders like Amazon, you can potentially increase your profit potential, reduce your risk, and simplify your trading decisions. Remember, the key is to align yourself with stocks that are demonstrating the strongest relative strength and leading their sectors higher.